Right. Hi everyone, can you hear me? Are you okay?
Yeah.
Fine.
Yeah.
Sorry about that. Apologies. Right, we just wanted to get the recording sorted out as well. Right, thank you so much for your patience. We are back and up and running. But before we start, as usual, please, can I just draw your attention to the disclaimer that I know is up on your screen at the moment. Trading is a very risky business. It doesn't matter what market you trade. Please don't ever think of using money that you cannot afford to lose. As I said, thank you so much for your patience. I see from the attendees, I know we've got some of you already have our indicators, some of you have our forex education program, and I can see that we also have a lot of new people as well. So before we start and move to the charts, can I just very briefly just say the purpose of these sessions is really to explain or to demonstrate and to highlight how the methodology that David and I, my husband David and I, have been using for over 20 years in our own trading and investing, volume price analysis can be applied to the markets. In this session, we just look at the forex market. If you were with us yesterday, it was we looked at indices and stock trading and commodities, but this is very much a forex session. The methodology is actually outlined in detail in this book, The Complete Guide to Forex Price Analysis. I'm really proud of the book. It's also been translated into Chinese and Japanese, and Chinese not only on mainland China but in Taiwan as well. And it's always very humbling to receive emails from Chinese readers, actually in Chinese, and between the two of us we have this wonderful correspondence using Google Translate. We do get some very odd translations, but I do believe VPA has translated very well into Mandarin. There is also a forex version. I know some of you have this as well, and it's Forex for Beginners, where the methodology, as I said, and it just focuses on the forex market and really what you need to know to get started. In this session, we really talk much more about spot forex. We will be doing some currency futures in some future sessions, excuse the pun, but at the moment we are just going to be looking at the spot forex market. I have MT5 running and David has NinjaTrader, the platform that was, it's not the platform that's causing him a problem. He's using a slightly older machine, and that's the machine is causing us issues this morning. And what we also bring into these sessions is elements that we cover in the what we call the Complete Forex Trading program. And I know we have some of our students who come along to these sessions. It's a very comprehensive program, and it really is everything you need to know from the technical, fundamental, related markets, which is what we talk about here, the mechanics of trading, and of course the all-important psychology of trading as well. But we'll explain a little bit more about that perhaps towards the end of this session. Right, let me just close that down, bring up that's it, and and we were looking at and in fact, as I said, while we were waiting, that the cable was in a washing line, looked at the hourly chart, the 30-minute, and suddenly we have had a little bit of a move. But and obviously anything to do with the British pound is really being driven, dictated by what is going on in with the sort of shambles that we call Brexit over here in the UK, and is causing all sorts of volatility. I want to talk about volatility as well, because it is an important element for you to understand as a day trader, because without volatility, and by volatility I do mean things have to move, because if you want to take a trade and take some pips, things have got to move. If they're going to stay in a washing line for hours and hours on end, it is going to be hugely difficult. I'm just going to stop there. Let me pass over to David, and he can say hi as well. I think he's recovered now. He's just having his tea, and giving him a bit of time to recover. So I'm just going to pass over to David, and then we'll actually start the session.
Thanks, Tony. Good morning, good evening, good afternoon, wherever you are in the world. Hopefully you can hear me. I'm just peering around my monitor at Anna. Can you hear me okay? Yes, fine. Apologies for all the delay and everything else. Entirely my fault. Well, not entirely my fault, but technology and all the rest of it. We are in a different location, so we have different equipment, and the one I'm on is a little bit older, and it's for some reason it threw some really odd errors. So there we are. Anyway, I've managed to sort it out. Hopefully it'll hold together for the session. So I appreciate your patience. If this is your first time with us, a very warm welcome. We run it as a two-hander. We flip-flop between the two platforms. Anna's on the, are you on MT4, MT5? Oh, Anna's on MT5, and I've got the NinjaTrader running on my machine, which hopefully will stand up. So we will flip-flop between the two, and we will see what we can dig out this morning. As Anna said, there are moves on the pound. I've actually gone to the pound Aussie, believe it or not, because there's been some pretty strong moves there as well overnight. And if you were trading yesterday, and if you were joined us last night for the stocks and futures session, then yesterday was just one of those days when you had to make money. It was a big money day, and it really didn't matter what you were trading. If you were trading indices, if you were trading commodities, if you were trading currencies, there were moves across the piece. It was just one of those days when it was hard. I wouldn't say it was easy, but it was certainly straightforward. It was just a day when you made money, and really the only issue you had to deal with was just staying in to maximize profitability, and it was just another great day. We'll see what happens today. Certainly in terms of yesterday, it was the Aussie. We were heavily involved in the indices and also in the commodities as well. I'm just going to pass back to Anna. We both have new screen layouts, so please do bear with us. These are not the usual ones. We will get these configured. We just got these configured yesterday. So we are a little bit thin in terms of the number of pairs we're covering, but please bear with us. We will actually flesh these out over the next few days, so it'll be back to normal next week. Just going to pass back to Anna. If you have any questions, just drop them in the chat box. Happy to answer them there. Or if they're longer questions, we're happy to answer them on air for you as well. So I'll pass back to Anna.
I really think, although, as I said, Brexit is such a huge story at the moment for all, obviously for all sorts of reasons, and has been driving the price action for sterling. I really just want to look at the US dollar, because in this, certainly for the last, is it 2 or 3 years, David, the December Fed hike, will they, won't they? Certainly for the last 2 to 3 years, in this, where we've got Thanksgiving on Thursday, and then in the run-up to the end of the year, we always have this a bit of a pantomime, really, as to whether the Fed is going to hike interest rates in December. I think, from memory, I think they have every time, the last December, the December before. But this one is a little bit. It's the first, obviously, December meeting with the new chairman. If you were trading anything with the US dollar last week, you'll know that the dollar had a big fall. You can see here, I've got the dollar index over here on the left-hand side. This is Friday's candle, and really it was the result of the vice chair of the Fed, a guy called Clarida, who kind of, the market interpreted his words as maybe they were rowing back from their interest rate path, in that, you know, I don't think he was putting the December hike in under scrutiny, but he was certainly sort of thinking out loud and saying, well, you know, the IMF has said the global economy is slowing, and there is some very important data coming out for the US. We had some yesterday with the housing stats, which came out well below expectation. So generally, what happens with the Fed, I mean, every trader on the planet pays attention to what the Federal Reserve is saying and doing. And in the run-up to the meeting, various members of the Fed will come out with statements. They will come out with speeches, and the market will take note of those members of the Federal Reserve who have a vote. Not all of them have a vote, so the one thing you have to really acquaint yourself with, and we've not mentioned this for some time, is who's who on the central banks. In fact, you should acquaint yourself with all the central banks and the members of the central banks, who the chairs are, who the various voting members are, because when they do speak and they make comments on the market, you have to know which of these characters is likely to cause a reaction. And clearly there was a reaction on Friday. I actually posted up on Twitter that maybe the traders were reading too much into what he was saying. But whether that's the case or not, we just have to look at our charts. The dollar starts to fall dramatically. Maybe that's part of the reason. Which side do you want to be on as a day trader? And this is going to become more of an issue as we go in towards the end of the year, as I said, primarily because of the December of this December meeting. I'll bring up when we move over to David's screen, I'll also find the CME, which is the Fed Funds Watch tool, and that's the futures market, which is pricing in, whether the Fed is going to raise rates in December or not. And interest rates differentials, but in pairs, is something that you have to be aware of. And as I said, and it will drive the strength and weakness of a particular currency. I'm sure those of you who are more experienced, and certainly if you've read the books and any of our books, and you're certainly on the program, everything I say will, you will understand exactly where I'm coming from. But I do appreciate we have a lot of new people here. And traders, forex traders, everyone starts with the charts. Everyone starts with trying to find a setup, trying to find a means of interpreting the price action on a chart so that they can take look for a potential trade. But you soon begin to realize that the technical picture, the technical analysis that you're carrying out on your chart, it doesn't matter the time frame that you're looking at. You soon become aware that the picture behind it is much more complex. It's just not a case of saying, well, if the price reaches this level, I'm going to buy or I'm going to sell. It may indeed pause at that particular level, but you have to, you've got to see the context of the price action. And what I've done now with the workspaces, I'm always changing my workspaces and trying to make my life a little bit easier, because of the indicators that we've developed are all supportive of the VPA methodology, of which support and resistance, important levels that we have on our chart, is a key factor. And those levels are not just dictated by the price action, but also dictated by the volume, and also dictated by the institutions, by the option expiries, and the order boards. And we have to have some way of identifying which of those levels are important. So what I've actually done here, this is the dollar index. And as I said, you can see the large fall here that we had on Friday. It was carried over on yesterday. There was a continue to fall. And rather than put, these are my important levels. These are based on the Camarilla protocol, and we've developed an indicator for this. Rather than put them on the main chart, what I've done is I've now extracted them and put them on a much, if you like, a much cleaner chart, so that when I see the price action, if I just move this down to the hour as well, there we are here, I can look at the price action on one chart, and I look over and I can see, well, what is it, where is it trading? If I move down to a faster time frame, it's probably easier. Let's move down to the 5. It can be a bit spiky. Let's have a look. So the MT5. There we are. And we can actually see it's pretty much in consolidation. And if I move this down to the 5 minute as well, let's see what it is. How does that correspond with the levels here? And let's have a look. Let's bring that down. I don't know where let's have a look. Let's try 15. All right. I normally have these on multiple screens, so you'll have to forgive me. Here we are. I've got 15 and 15. Right, we could see that it was in consolidation, but with the Camarilla, I know I don't even have to look at blow up the time chart, because it's trading in what we call in this neutral zone, which is the R1 and S1. That tells us that even on the faster time frame, between these levels here, it is essentially in congestion. There is no clear direction for the dollar at the moment until it either breaks above the R1 or breaks below the S1. Consolidation periods can be very frustrating for traders, but eventually everything moves. Nothing stays still forever. But seeing that on the on my trading chart, but seeing the levels clearly marked on a separate chart, it just makes my life a little bit easier. Right, have you got something to and then what I want to talk about later as well. In yesterday's session we were talking about how we select how we screen for stocks for day trading, and I know those of you who came last week, we also looked at, well, how would you use the same approach for forex, and we looked at volatility and how you use the investing.com tool, which I'm just going to reprise, as I said, later on, because I had some emails about it, and I know a lot of traders maybe hadn't even thought about that, because you can, selection of pairs, selection of currencies and currency pairs to trade is something that it is trial and error, and it depends on where you are in the world, and lots of other factors such as time zones, etc. And you can screen for forex as you would stocks as well. Now, we've developed some tools that will help you as well, together with our tools and the volatility data that you can get at investing.com. At least it will give you more than, better than a very high probability of being able to find a trade that is going to move and is not going to frustrate you because it's going to be stuck in consolidation for hours and hours. Can I move over to you, love? Is that okay?
You can, yes.
Fine.
Just going to switch screens over to Ninja. Bear with us a moment. Hopefully this will work. I can't actually see Anna's screen because we've got a different configuration in the office, so hopefully that's come up.
Yeah, yes.
Yep. Okay. This is a very different configuration to possibly what you've seen before certainly on my screen at any rate. And one of the reasons I've done it is to highlight the importance of using multiple timeframes and how that helps you in so many different ways. It doesn't really matter what market you're trading, whether it's forex, whether it's indices, commodities, stocks, it really doesn't matter. It just gives you that different perspective. What you're actually looking at here is the same currency pair, and I've just pulled up the pound Aussie because there's quite a lot of selling of the British pound right now. And I've actually linked them. One of the nice things with NinjaTrader is this little green icon here is actually a linking mechanism. You can either link by instrument or you can link by time frame. And I've got these linked by instrument. So if I change these, I'm not going to at the moment because I don't want to break anything given the battle with technology this morning. But basically, you would just type in your currency pair and all of these would change simultaneously to whatever pair you were considering. But you can also interval link them as well through this other icon, which I'm not going to do at the moment. So what you're looking at here is the pound Aussie across a multiple array of time frames. I've got the 5-minute, top left, I've got the 10-minute, I've got the 15-minute down the bottom, I've got the slower time frames of the 30, the 60, and right the way out to the daily down here at the bottom right. The first thing to note is that the price action you're looking at in a faster time frame will help to reveal what is going on in terms of the slower time frames. And by that I mean, if I pop these up full size so you can see them a lot easier. We've got a nice little example here, which is a very simple example, but it really just goes to the heart of what this business is all about and how to use multiple time frames and what it can reveal. The first thing we've got here is we have a very simple 2-bar reversal, we've got a down red candle and an up green candle. Now that is very easy to overlay one on top of the other. We've talked about it many, many times. And as you would expect, this is 7 o'clock. This is 7 o'clock our time. This is when Europe opens. So naturally, you are seeing an increase in volume. This is what we expect to see. And of course, as London opens in about half an hour or so, that again will increase. So the fact we've got an increase in volume here is nothing to do other than the fact that we've gone through European Open and we are seeing an increase in market liquidity as a result. So we've got this very simple 2-bar reversal. So on the 5-minute, if we pull up the 10-minute, what are we looking at in the 10-minute? We've got the little hammer candle there. That's our 2-bar reversal. Now that's very, very easy to do with 2 candles. What is not so easy to do is when you're dealing with multiple candles, and that's really where it comes to our assistance in terms of using multiple time frames, because it reveals so much, not only about the candles, about whether we're looking at strong candles that are forming in different time horizons, but it also gives us all the other information about support and resistance levels, about where our volume point of control is, and so on and so forth. And in this case, what we're seeing here, we've got this little hammer formed, and we've got some decent volume under it. We've got decent volume because we've gone through the European Open. So clearly there is some buying in here. Now, the issue as always, is whatever time frame you're trading, you are trying to establish what is coming up at you from the faster time frames. So on a 5-minute time horizon, is this going to generate into a developed change in trend? In other words, from what has been a bearish trend into a bullish trend? Or is what we're seeing merely a reversal or a pullback in the secondary and just simply part and parcel of trading? And that's the other issue that you're trying always to answer by using multiple time frames. Now, obviously, the answer to that question will depend on what is your time horizon. If you're a scalping trader right now, and you're looking at the 5-minute chart for this particular pair, then are you looking at this as an opportunity to take a long position, trading against the dominant trend? You're well aware of the fact that we've had this very bearish move, and you're now prepared to take a reversal trade on a vast time frame chart, but very aware of the fact that you're also trading against what is considered the dominant trend on your 5-minute time horizon. Nothing wrong with it, just got to be aware of it. The other points to note about it are if you look at the trend monitor, for example, the trend monitor on 5 has been bright red for some time. If we move to the 10-minute, we've had the transition from what was the bullish into the darker red, out into the bright red, where we've had this downtrend. If we move to 15, same principle. We had the uptrend, we had the transitional color, and now we're into the bearish phase of price action. But when we get down to the 30, this hasn't transitioned at all yet. There's no flicker that, as of yet, the bullish trend has paused, found some weakness. There is no change in color in terms of the trend monitor at all. And this is the other aspect, is using the indicators to help you understand what is going on in the faster time frames and whether that change impacts you in terms of your chosen time frame. Now, if you're a 30-minute or a 60-minute trader, what you're seeing right now in terms of this move here is relatively minor in terms of your perspective, but is actually major in terms of an intraday scalping trader's perspective. There will be an awful lot of people in here short, and there will now be people on as I've explained, on the 5-minute chart, or maybe even on the 1, 2, 3, 4-minute chart, who'll be looking to take a reversal trade to the upside. And really, that's what this business all comes down to. It comes down to your perspective and your time horizon and what it is you're looking at and what it is you're trying to establish. And if you then go to the indicators themselves and the other messages they convey, for example, on the 5-minute, we know the volume point of control, this yellow line here, that's where we're trading right now. So in terms of a 5-minute trade, we're looking at volume building in this region. We've got a volume point of control that's sitting right pretty much where the price action is. We're also looking at the various support levels and resistance levels. We seem to have gone through this pretty strong area of what was potential resistance that appears to be breached. If the market is going to move higher, we've got some very thin resistance overhead here. And we've got a low volume node here in terms of the volume point of control. And we've got a very solid platform. This was actually breached with the 2-bar reversal here, but we've got a pretty solid platform of price support in place here, which is helping to push the market higher at the moment. We've got decent volume under that last candle, decent widespread candle, no wicks to top and bottom, decent volume below, pushing the market higher. So if this is going to continue higher, then certainly from a very simple perspective, then we've got a low volume node, very little in the way of price resistance. If it does break higher with decent volume, then getting through this region is going to be fairly straightforward. The next area we're then going to run into, which is just a matter of common sense, we've got this sustained area of price congestion, which went on for, a couple of hours or so earlier on overnight. We also had the volatility candle here, so if we were trading that in the Far East Asia session, that would have been a heads up that this is not looking terribly strong, and we're expecting at the very least congestion and possibly a reversal. And going back to the overlay principle of candles, these two candles, put one on top of the other, what have you got? You've got a hammer, sorry, beg your pardon, a shooting star candle or an upthrust candle on a 10-minute time frame. 2 5s make 10, and there we go. That's your reversal. And when you put all this lot together and you drop down to a much slower time frame, let's go back to the 30, for example. How does that look on the 30? Well, it looks like this. So if you're looking at that on the 30, but you're actually trading a 5 or a 10-minute chart, for example, you're starting to see some weakness come into this market. You've got some decent resistance here in terms of price, but you've got some weakness certainly coming in here in terms of the candle arrangements. And obviously what we're looking at here is comparative volume, because this session here is all the Far East, because we're on a 30-minute time frame. This was yesterday's price action. This is overnight our time. And now we're starting to come out into Europe with volumes building there. So really, that's what it's all about. And you're trying to identify all the time. If you go to the 15, for example, what does the 15 tell you? Well, you've got the volume point of control here, which is sitting below. So as the market approaches this level, and you've also got a huge amount of price congestion over here, which is described on the volume point of control with this huge amount of volume. So if the market is coming down to this region and you are a scalping trader on a 5-minute chart or a 10-minute chart, then your expectation as a scalping trader is that by virtue of what you're seeing on the 15-minute time frame and maybe even the 30, is that you're expecting something to happen. You are anticipating that the market is not going to move very smoothly through this region. Why? Because you've got all this price congestion here. You've got volume-based congestion, and you've got price-based congestion. So whichever way you slice and dice it, the probability is that as the market approaches this price region, it's not going to go through there very quickly. So is it any great surprise that you've seen a pause point and a short-term reversal? And the answer is no. And that's also supported by the indicators. If you go back to the other workspace I've got set up here, I've got the currency strength and I've got the currency matrix. Just drop that out of the way. Excuse me, I'm just going to switch off for a moment. I've got the CSI on the left. I've got these set up on, that's on 5-minute. I've got the currency matrix on 15, and I've got the currency array on 15. And of course, what you're looking at now is you are looking at what is going on in terms of overbought, oversold, strength of the buying or strength of the selling. Am I in the right pair? What am I looking at? What am I seeing? In a way, we've done it back to front. I was going to say, I was going to use a rude word. We've actually done it back to front. because normally you would start here and then go to the charts, but I happen to have the charts up and there were some nice lessons there. But this is always the place you would start. You start with the currency strength indicator. So what are we seeing right now on 5? And again, you'd have this in multiple time frames. Exactly the same principles. You're starting to see some pretty strong buying coming into the pound. The pound, the yellow line, is rising vertically. It's rising pretty strongly. Now we're looking at the pound Aussie. What's happening with the Aussie? Well, the Aussie is also rising relatively strongly. So in terms of the best opportunity to trade this pair, it's probably not going to be the pound Aussie, because the pound, the yellow line, and the Aussie, the blue line, are both moving together. And what that means is that between those two currencies, there isn't a great deal of opposing force between the two. In other words, there's no strong divergence. You haven't got one that's rising strongly and the other falling strongly. So strong buying in one and strong selling in the other. That is the perfect combination. That's what you're always looking for. So if you're looking to trade the pound right now, given that we're coming up to London, I'm not suggesting you would or you wouldn't, but just as an example, we've got very strong buying of the pound. So what are we looking in terms of a counter currency? Well, the euro was buying strongly and is now starting to sell off, so it's rolled over on 5. You'd obviously be looking at that on 10, on 15, all the other time frames where probably the chances are it isn't rolling over, it's probably still moving up into relatively near overbought. But if you're looking at this just as a straight example, you're spoiled for choice. You could look at the pound against the euro, certainly one to look at. The yen has also rolled over, so possibly pound yen, they're starting to cross. Or just a very straightforward example on cable. The dollar is the red line, so that's falling quite strongly in this time horizon, and the pound is rising strongly. So you're always starting here, moving to the charts. Then you've got the currency matrix. We've got the currency matrix on 15. Pound New Zealand at the bottom, pound Aussie, pretty strong pound selling. But now what we're starting to see, and what we'd expect to see, again, you'd have this on multiple time frames, you want to see these starting to lift off these extremes. And the same is true over on the currency array. Same time horizon, I've got the pound New Zealand down here. And these are starting to lift. And that is the process, the basic process of starting with the indicators, using them in multiple time frames, understanding what is going on in terms of market sentiment. Because when you look at the CSI, what you want to establish is whether that buying in the pound is universal. In other words, is the entire market buying the pound? Well, it is and it isn't, because in terms of the matrix, it has been universal, but it's starting to break up a little bit. If you wanted a perfect array, a full house, if you will, to use a card analogy, you'd want to see the euro pound up at the top, and you'd want to see all these aligned down at the bottom. They're not at the moment, but this is on 15-minute. Bear in mind, this is a 5-minute time horizon. But it all goes back to this issue of what you see on a fast time frame. If it is a change in trend, a true change, reversal, in other words, from a primary to a primary, in other words, from bullish to bearish or bearish to bullish, then ultimately that is going to ripple through across the time horizons, both of your indicators and of the charts themselves. And if we go out to the currency array, again, it's a little bit of a mixed picture right now, because we're seeing buying of the pound against the Aussie, but we've got selling of the pound against the New Zealand. And at that point, you have to try and unravel what it is that are the primary dominant forces. So is it, what is driving that particular pair? Is it pound weakness? Is it New Zealand strength? Is it a combination of both? How does it play out? And you would go through the same process looking at New Zealand dollar in terms of the matrix, in terms of the array, to understand what is going on in terms of your counter currency. In other words, is that an isolated piece of strength or weakness, or is that currency also being bought and sold universally across that particular currency complex? Let's just go back to the pound Aussie on the multiple time frames. There we go. Excuse me. And really that's reflected in what we're seeing right now. We're seeing a pause point. If I pull up the 10-minute, here we are. What have we got? Not looking terribly strong. Why? Because we had this little rally, but then we've had this candle come in, we've got a wick to the upper body, we've got some decent volume under it. And remember, we're comparing volume here, we're comparing here because this is the session we're in. Can't really compare it over here because this is Far East Asia. So what we're looking at is the comparative nature of what is going on here in terms of the last 10, 15, 20, 30 minutes, whatever it may be. So you're looking at the 10-minute, that doesn't look terribly strong. If we go to the 5-minute, what do we see on the 5-minute? Well, what we're seeing on the 10-minute is a reflection of these two candles here, one placed over the other, which is relatively straightforward to do, but it's not easy to do when you're looking at three groups of 3, 4, 5, and 6 candles. And if you get 6 candles grouped together, which create a hammer or which create an upthrust, that's a great signal. We've still got the VPOC here, we've got resistance here, we've got minor resistance here, and we've got a platform of support below. The trend monitor remains red, the trend line's climbing a little bit. And we know for a fact, really without looking at the chart, just purely based on the CSI, that this particular pair is not the best pair to trade right now because both the pound and the Aussie were rising on the 5-minute. And that's why you're seeing congestion. And that's why the CSI is so powerful, because not only does it tell you which pairs to consider, it also tells you which pairs that are not worth considering at the moment. Now, this may change in the next half an hour or so, but for the time being, if you've got currencies which are rising together or falling together, they're not going to offer you the best opportunities. Equally, you may be looking for reversals. If you're looking for reversals, fine, but you want to be looking for one which is very strongly overbought, another which is strongly oversold. Wait for that reversal to develop. You'll get in early, but then not everybody wants to be a reversal trader. Some traders want to trade trends. They want to jump in the trend, so you've got to wait and be patient for that trend to start to develop. But then in terms of the CSI, what you're looking at in terms of development there is obviously for one currency to be rising strongly, one to be falling strongly, maybe at the crossover or maybe earlier, you're prepared to get in and jump onto an existing trend. Now, what's happening at the moment, as I say, we're in congestion. We're in congestion for lots of different reasons. We go out to the 15-minute. What have we got there? Sort of similar picture. Let's pull that up a little bit. Trend monitor's bright red. The trend line hasn't started to curl up. It's still diving quite strongly. Decent volume under this one. But again, remember the fact that we're in Europe, which began here. If we do go back down onto the VPOC, be no great surprise. We've got a lot of price resistance through here. We've got a very strong level through here, which we've actually breached. And we've got a low volume node above. Let's go down to the 30. Not really much in terms of development because we're early session at the moment, other than we're trading around the volume point of control here, and we've got a low volume node here. Not a great deal in the way of resistance overhead. So if we're trading this alongside, got some decent buying coming in there on 30 under that particular candle. And then you're up to the 60-minute and so on and so forth. And what the 60-minute tells you is that we are still in congestion from a 60-minute perspective. We have the volume point of control here. We've got an absolute ton of volume here. The market's been trading sideways for a long, long time. We've got a huge, very well-established price resistance ceiling in here. So from a longer-term perspective, from a 60-minute perspective, this is still very much bullish. It's the trend monitor still bright blue, no flicker of a change there. And it is all about perspective. Sorry to bang on about it, but that's really what it's about. And then you go down to the daily, which really just gives you context of what it is you're trying to do. And it's self-evident that this is very bearish right now. The trend monitor's bright red. The trend line is down here. We had a lot of heavy selling the other day, a lot of volume associated with it, effort to rise. Not a great reaction yesterday. There was quite a lot of selling yesterday. The volume point of control is sitting overhead. It went through this, the price action went through this low volume node here, which is what it's all about. It's all about anticipation. It's sliced through that dramatically and has driven the market lower with a decent amount of volume below. And from an intraday trading perspective, that is what you've got to be aware of. The focus, the sentiment right now for this particular pair in the much slower time frames is very bearish. that may change. And it's all about trading with the market sentiment. Once you get beyond the sort of 30-minute time horizon, then you've got to be very aware of what is going on in terms of the daily. From an intraday perspective, it just gives you a heads up of what it is you're trying to do and the narrowness, if you will, of the price action that you're trading. And the other aspect of this, of course, is also that if you're trying to trade this as a scalping trader, you've got to be very aware of the spreads that you're dealing with, because this is not the sort of pair that you're going to be able to trade effectively as a scalping trader. You're fine if you're moving out to the 15 minutes and the 30 minutes, but certainly on a 5-minute, the spread is going to kill you, because trying to take a few pips out of this particular pair with a wide spread is just not going to work. It just won't. You'll never make it back, because the percentage of spread to the actual number of pips you're trying to take as a scalping trader just makes the maths doesn't work. It's as simple as that. It's like trying to run the 100 meters with a sack of concrete, or you're running 100 meters and you're giving everyone else a 50 meter start. It's not going to work, trust me. If you're going to scalp, then you've got to be looking at those pairs with tighter spreads. But in terms of slower time frames, absolutely no problem at all once you get beyond the sort of 15-minute, 30-minute time horizon. Starting to see a bit of pickup in. Let's just go and see what's happening on the CSI, and then I'll pass back to Anna for a change of voice. Let's go to, there we go. What's happening? Okay, we've still got the strong buying of the pound. I would still suggest that the pound Aussie, this pair here, we're looking at the blue and the yellow, is not the best combination unless the Aussie starts to roll over, which you're starting to see literally as I'm talking there. Now, at some point, that may well be an opportunity for a trend to develop. If this selling of the Aussie continues and the buying of the pound continues, terrific. You can jump on that trend if it's one you choose to take. Alternatively, as I am doing, I'm eyeing up the New Zealand dollar right up here, very strongly overbought. And I'd be looking for something down at the bottom, possibly very strongly oversold, and then take a reversal trade, which is, I have to be honest, my preferred, but that's just me. I like to get into a trend early, so I'm always looking at reversals. I'm always looking at the currency matrix, for example, for the same reason, and at the currency array. I'm always looking at the extremes. What is at the extreme right now? We've got New Zealand dollar up here, we've got pound New Zealand down here, we've got Aussie New Zealand, we've got New Zealand dollar up here. Because on the currency array, what it also flags up in this ranking ladder on the right-hand side, not only do you get the ranking, so you're seeing strength of the currency pair, you're seeing which pairs are moving most strongly in that particular time frame, but in addition to that, you're also seeing when that particular currency pair is potentially approaching an oversold or an overbought state, and when they're reaching potentially and I do stress the word potentially, then the oversold will come up in this darker color, and when that transitions to fully oversold, it will go bright red and the brackets will be removed. So you're constantly seeing these signals up and down the ranking array, but you've also got the ranking ladder here, which is telling you what is going on over here. And it is the strength of momentum. It's without looking at a chart, the strongest trend right now on 15 is in pound New Zealand. So there's a very strong trend developing there, or has been developing, certainly over the last sort of 15, 30 minutes, maybe a little bit longer than that. And what the array is telling you is whether that sentiment for the pound is universal and the strength of that buying or selling in the British pound. And that's all just simply laid out for you on the array. Let's see what's going on. We've still got buying of the pound going on over here, which is fine, rising very strongly. Let me just try changing to if this crashes the system, apologies. But okay, let me move over to cable. And just before I move to cable, very quickly, this again, it just reinforces the whole concept of using multiple time frames. What have I got? I've got a volatility candle on 5. What's that telling you? It's telling you loud and clear, be careful, there's volatility, expect a pause, expect congestion. That's what this is all about. It's using all the time frames, because you haven't got it on 10, you haven't got it on 15, and you haven't got it on 30. But if you're trading on a 10-minute chart and you haven't got the 5-minute up, you're missing out on a piece of information. That information is telling you loud and clear that market is likely to congest within that particular time frame and for that particular pair. It's just so simple. The volatility indicator is so powerful. Use it in multiple time frames and give you the heads up when something is happening in a time frame that you're not necessarily aware of. This is all it's about. Let me change this over. Hopefully this won't crash the system. Let's change that to cable. There we go. Okay. And again, you know, it just reinforces the whole message. What have we got here? We've got volatility on 5, congestion, and we've got a full-blown reversal going on right now. What have we got on 10? We've got volatility again. We've got this hammer formed here with decent volume under it, and we're seeing a reversal going on. We've got a 2-bar reversal on 15. So, you know, I don't need to look at the 30-minute chart, but I know instinctively, automatically, if I overlay one on top of the other, what have I got? I've got a 30-minute hammer. So what is that telling you? Just go down to the 30-minute. There we go. You know, it's all there, and you've also got volatility. So if you're seeing that there, what are you expecting? At the very least, congestion. You've got a volume point of control in here as well. So we're trading in congestion anyway. So we're congesting in congestion, if you will. You've got this massive volatility candle. And this is part and parcel of dealing with pound right now. If you're trading the pound, this is a fact of life. It doesn't matter what pair you're trading, you're going to have to accept the fact it's going to be volatile, and it's going to be volatile for some time to come. So, you know, please don't think that, you know, Brexit is all going to come and go and everything's going to be hunky-dory and the pound will be back to what it used to be like 5 or 6 years ago. It won't. It's going to carry on like this for some time. So that's on 30. And where are we on the daily? Oh, that's on the 60, beg your pardon. Just pop that up there. That's on 60. We're in congestion. Now, you as a breakaway trader might be looking at this as an opportunity. We've got the volume point of control down here. We've got this very solid level of resistance, which is in here on the red dash line. This is purely based on price. This is being tested and tested and retested the whole time, not moving away. We're also trading inside this volatility candle, which is a variant on the 60. So, you know, for a fact, we know we're not going anywhere right now until we move outside of this particular range. Once we move outside this range, this is the ceiling, but it's pretty light. It's not very substantial at one spot to 28.80. So if we go through there, look at the volume that's up and down here, purely because this price action crashed through here. So if the market is going to take off, then going back up through here is going to take no effort at all because there's no price resistance in the way. It's very light, and there's virtually no volume here. This is all low volume node, if you will. There's hardly anything here. So for the market to reverse isn't going to take much effort, much volume to drive it back up through there. That will largely be driven not by fundamentals, but it's going to be driven by something someone said, or, you know, another meeting, or this is going to happen, or Brexit's not going to happen, or there's going to be a new government, or the prime minister is going to resign, or she's going to be forced out, etc., etc., etc. It's you know, that is a fact of life. It's not; these are not driven by fundamentals. This is just driven by politics and rhetoric and who said what to whom and when and where. So it's just another example of using multiple time frames to give you the information to help you, whatever your time horizon is, in making those trading decisions, but not just about getting in, because getting in is the easy part. It's actually about staying in, which is the hardest part of all. And that's where this will all help you. Just going to pass back to Anna.
To get the screen just 2 minutes before the London Open.
Sorry.
That's all right. That's all right. I don't mind. I don't mind. I don't mind. I don't know. Really, just picking up on obviously all the themes that David has been explaining, and this is the MT5 version my MT5 and a suggested workspace that you can put together. You can put it together with MT4 as well, but I just use MT5 because you've got more time frames. And I spoke about when we started about the volatility, and we do need volatility as intraday traders, scalping traders, short-term traders. If you don't have volatility, then you're going to end up sitting and waiting and waiting and waiting for things to develop. I mean, if you're a longer term trader, fine, you can you have that luxury. But if you're if you want to take some points, not quickly, but from things that are moving, volatility is, you're going to have to make it your friend, and you're going to have to understand it. Now, the volatility around the British pound, people say, oh, it's so crazy, you can't, it's ridiculous. It's a roller coaster. It goes up and it goes down, it goes up. And in a way, as a trader, that's what we want. If you understand what you're actually seeing on the chart, and when the volatility, if you have an indicator such as the volatility indicator, that it is triggered. If I just give you an example of this last, so to the daily chart for the, I'm not going to, just waiting for the London Open to happen. All right, I've actually got the Camarilla here. This is where are we? This was Thursday, actually. This was the big day on Thursday. What happened on Thursday? Who resigned? Anyway, whatever the reason was, it was obviously to do with Brexit. You had this massive, the day before, I actually said this was a doji candle. In the doji candle like this, it's a candle of indecision. But from a trading perspective, you could say it's great two-way price action. Nobody knew what was going to happen the next day. In fact, this is and the volatility was triggered. These are the little purple dots here either side. Now, when you get volatility triggered in this way, what happens from a price action perspective, price will generally, and it's a very high probability that it retreats to within the spread of that candle. And also we had some buying coming in towards the end of the session, as we can see from this wick here. But as a trader, traders who don't understand volatility, when they see something like this, they see fast moves, the temptation is simply to jump on board and say, right, it's moving fast, it's going to carry on lower. Now, within the spread of the candle, of course, it did carry on lower for quite a considerable time, but at some point everything comes to a halt and pause. It runs out of energy, it runs out of steam, and this is what we see. So you look at the candles, you say, well, what is there a wick forming at the bottom? Is there a lot of volume underneath it? Knowing what you know about price action and volatility, then you have the retreat back into the spread. But when you see fast moving price action, it does take, you do have to take your the courage in your hands, as it were, and you have to trust your analysis of the candles, your knowledge of how volatility works, and say, yep, that's it. I've got a wick to the bottom. I've got lots of volume underneath it. I know I've got volatility because the indicator has triggered. It's based on average true range. It means that in this time frame, it was way over what what you would expect. And you say, right, that is going to be a buy. It's tough. Now, in this candle here, this is Friday's, there was obviously some selling as well. You can see it obviously shot up, and then by the end of the session, it actually came down again. Yesterday we had another doji candle, but look at the range of the candles. The range of the candle will also tell you there are trading opportunities in the faster time frames. You just have to be aware of multiple time frames, how multiple time frames work. Look at the price action, look at the volume, look at the candle patterns, and take advantage. And also look at the levels that the price action reaches. It got here to the R2. Is it likely to stop? Yeah, it's a significant level. It bounced off the in this region here, the S1 and the R1. As I said, it's like a buffer zone. So we're waiting here for it to go higher. It's kind of trading to the exact opposite to the news that is going on. Everything is collapsing. Oh my goodness, well, why isn't the pound being sold? You kind of have to be aware of the context of the price action, and also be detached, have a kind of semi-detached attitude to it. Now, going back to, this is the move that actually, I've got the 12-minute. My configuration is my Renko, which is a non-time based chart. So it sort of it takes away all the noise, if you like, at the live edge of the market. And you can see here, in fact, it is carrying on higher into London. It's not doing its usual a complete reversal at the moment, but you know, it's only 3 minutes into London. So I have a Renko that's actually set to 2 pips. I have a 3-minute chart, and this is the move that we saw. Again, volatility. We had the volume point of control. It was going nowhere. Look at the depth of congestion. It doesn't matter. Just be patient. If we look at the hourly chart on the congestion, as I said, it's a washing line, and we're now waiting for a breakaway. I mean, essentially, we wait for reversals, or we wait for breakaways. As a trader, you have to decide whether you prefer to wait for a particular setup on a chart, similar to, let's have a look at, let's move this to 3 minutes again. Hold on a second. There we are. Right. We have 2 examples of a trade here. We have the congestion around the volume point of control, and we know it's congestion because we have the volume point of control. We see the trend monitor flipping in and out of red, green, red and blue all the time. There's no clear direction. We had an attempt to break away. We had it on volatility, and then we had the retreat back, and then, you know, a lot of traders don't like breakaways, breakouts, because of, they say there's too many fake outs, as it were. But you know, markets spend an awful lot of time in congestion, and it's something you have to be aware of and you have to deal with. So, okay, if you don't want to look at some kind of a breakaway, and you want to look at more of a reversal setup, you would certainly ignore all this. But at some point, it is going to break away. Everything does. Nothing stays in congestion forever. We did get a successful breakaway here. We have rising volume underneath it, but we also, with volatility, we had some buying coming in here. Why? Because we've got a wick to the bottom of this candle. It did retreat to within the spread of the candle, but sometimes with volatility you have momentum. Some people call this like a momentum play, and you know, you can be very easy to be seduced in thinking, oh right, okay, well, there was buying coming in here, it's going to carry on lower. It's like a fast moving train. You know, you put the brakes on, it's not going to stop immediately. It needs a lot of volume and a lot of stopping volume to come in to actually stop the fall lower. And markets fall a lot quicker and faster and harder than they rise. You don't tend to see this kind of momentum, if you like, in an uptrend. Do you agree with that, David? On a you know, I know you get shooting stars and you get deep wicks and what have you, but it's much more dramatic on when markets fall. So we had the volatility triggered, then we had rising volume, we had wicks. So we know there is a potential reversal setting up, if you like, and of course you'd have the other indicators to help you as well. And in fact, this is the move that we've been tracking. And where did it go? It went right back to the VPOC, and you know, in readiness for the London Open. This is the move that was picked up by the Renko, and it's actually coincided with this actual cross on the CSI. There is, in fact, if you've got the CSI, and maybe you've got an older version of the CSI, there is now an alert function on the cross you can set up, because crosses are really important for currencies, and it's just a nice way. They're just a quick visual highlight. Say, the currencies have crossed in a time frame. It could be an opportunity to go and you know, go and have a look and see if there's a potential setup. And moving back to the Camarilla, excuse me, this is on the 12-minute. This is the move that we've seen where we saw it within the S1 and the R1. And I said right at the beginning, this is what we call the neutral zone, and you know, it's got to go beyond one or the other. It's actually broken out of the R1. Where is it heading to? the indicator is telling you, whether you use Fibonacci, whether you use a Camarilla, at least you know where it's going to aim for and where it is likely to pause. And with this indicator, certain up to the hour, the values are calculated on a daily basis. But if we go to the hourly chart here, let's have a look. As you can see here, it's different values and these values will stay here until the end of the week. So it gives you a perspective both in a short term but also from a medium term perspective of where the currency pair is likely to be heading, not only heading but where it is likely to be pausing as well. So let's see what happens with the usual hoo-ha with the open. Not as much volatility as usual, David. Do you not think so? Not, but with the pound today, we have to remember as well. I've got Forex Factory over here. We have at about 10 o'clock this morning. We have the inflation report hearings, which is where the governor and the members of the MPC have to testify in the Parliament's Treasury Committee. Now, under normal circumstances, this is where the market and traders would get an idea about interest rates. Are interest rates going to be raised because of inflation? But given the political background and Brexit and whether the disaster that is possibly looming ahead, can they afford to raise interest rates despite what the data may be telling the Bank of England? So it's 10 o'clock this morning. So what we can expect some moves, then consolidation, more volatility, and we'll see what happens. And of course, there's Brexit in the background. Anything you want to say about these charts, David, at all that I've got on MT5?
The only thing I would add to that is that if you have never used a non-time-based chart in combination with a time-based chart, I would urge you to do it. I mean, this is a nice example on cable right now, albeit from a scalping perspective, but nevertheless, what a Renko does, it really does smooth the price action out. If you find, price charts are a little bit noisy perhaps, and you just want to smooth that out, then go to a Renko. What this does it works in the same way on MT4, MT5, and also on NinjaTrader. On NinjaTrader, it's called Renko Optimizer, but essentially, you have two options. You can decide how you want to set it. I think Anna's got this on 2 pips at the moment in terms of the brick size. But it also gives you the opportunity to select the best brick size, the optimal brick size. In other words, the indicator will calculate for you automatically what is the best brick size to choose for this particular time of the trading session and for this particular instrument, because it changes throughout the day. A lot of traders think, oh, well, I'll just use 2 pips or 3 pips, whatever, and that'll do. Well, it's guesswork at best. What the indicator does is, yes, you have that option to set it to perhaps something you want to use, but in addition, it automatically calculates for you what is the optimal brick size at this particular time of day, because it changes the whole time. What may be a good setting for early in the London session may not be the same later in the London session, early in the US session. You can recalculate the whole time. So you're trading at the right speed. You're trading with the speed that the market is moving at. If the market's moving quickly, then it'll give you a different setting. If it's a bit sluggish, again, you'll get a wider brick size. So it varies the whole time. And it's not just about getting in. The biggest problem all traders have, and let's face it, we all have it, is trying to stay in once we've got a position in the market. And if you use something like a Renko, the trend dots work absolutely brilliantly with it. They highlight pretty much bang on the changes in sentiment from the bearish to the bullish. You've got the red, it goes into the transitional colors, and then you go through to the next color phase. That will always move first. You can see the trend monitor there. It works in exactly the same way on the Renko as it does with all the other time-based charts. You've got the transitional colors, and then you're into the bearish or the bullish phase of price action. You've got support and resistance on there. The very strong orange or I don't know what color that is really, what you call it. It's not gold color, much better description. The gold colored lines, the strong line there is telling you you've got strong resistance or strong support. The dash line is telling you, yes, you've got price support, price resistance in place, but it's less well defined. It's not so deep. So you've got everything there. Once you're in a position, using the Renko is fantastic to help to keep you in. You'll see the congestion phases build. Of course, you'll see that on the price time chart as well. But it's just a great indicator to help you in combination. So use it as a blend with your time-based charts. And as Anna said, with regard to the inflation reports, normally that would have a big impact. Right now, probably much less so. I'm just going to pass back to Anna.
With support and resistance lines, however you know, whether you have a proprietary one or you have a Camarilla, it helps you with your stop loss as well. I mean, okay, it's at the London Open at the moment, and we have that to factor in, but we're back at the VPOC, and this looks very messy on a 3-minute chart, but it is looking it is a breakaway. Some volatility in the sense that there's a, you know, because it is happening at the time of the London Open. But when you put it together with the non-time base, it just smooths it out, and it really does help to keep you in. And what the levels do, they tell you where is it likely to pause. We now know it has to get, you know, for this, if this is going to carry on higher, we're going to have to have volume, and we are going to have to break and hold and carry over 28.75. So that's, the levels are there. You use them for stop loss, you use them as potential price targets. They will tell you where it's likely to pause. You know there's going to be you know, a pullback, and whether is a valid pullback or not, again, it's volume that is going to determine that, because prices need volume to rise, but they also need prices to fall as well. You need just as much volume to move the price lower than you do to move it higher. And if it's going to go low, where is it going to stop? Well, we've got the level here, 28.66 is a key level. And is it actually going to go back into this congestion again at 28.58, as I said, what we call between the in the neutral zone? So it'll be interesting to see how this price action plays out. And if you have the quantum tools, and maybe you're still using it in a simulation or a demo account, which is great, use them in this way. By all means, you have to, you know, you have to consider what kind of setup, what is your preferred setup. Don't be afraid of congestion phases. You know, do you prefer more, you know, reversal type traders? Because on the, certainly with the CSI, the currency strength indicators, that is what tends to attract the eye. First of all, this overextension of individual currency and currency pairs. But, you know, don't discount crosses. It's such a rich set of indicators in terms of the data, the information they give you. I know it can seem perhaps a little bit, you think, oh my goodness, you know, where do I start? And we always suggest, well, start with a currency strength indicator. Look at the individual currency, see how you compare it up with you know, the best counterpart. Or you can say, actually, I really do want to get to know cable. As I said last week, I wanted a cable. I want to get to know euro yen. I want to get euro dollar. In which case, as I said, and I'll just repeat it again here. Where have I got it? There we are. And for those of you who weren't here last time, it's on the recording. This is where you need to go to check out and do your due diligence, if you like, on the currency pair of your choice. This is cable, and you can see here the daily volatility in pips. I mean, it's nothing like the Mexican peso, dollar Mexican peso. and it's obviously, you know, driven also by what's happening in the dollar and obviously with Brexit. But it's a very healthy range. Now that actually breaks down to, it's not consistent throughout the 24-hour period. It helpfully tells you when it is most liquid, when it is moving the most, and it even helpfully tells you which are the best days, as it were. And I'm looking here again at cable at R3. Let's have a look. Let's have a look. Here we are. It's trying to get through 20. And where's it heading for next? Well, the key levels on Camarilla are the R4 and the S4s, because under the protocol, if it gets to these levels and beyond, that is also considered a valid breakout. But you know, there's nothing wrong with riding the move up to these significant levels. And as I said, you use them for not only for your price objectives, but for your stop loss as well. And what we need to see here, we need to see this volume building under this candle. We've had a lot of volume under here, but that is also slightly not distorted, but you have to factor in the fact that it is London, so you're always going to get a rush of volume at the time. Let's see what's happening there. The Renko just keeps going. It doesn't detect that there's been a significant pullback in the price action. I've got the CSI on the 6 minute. We can see the pound is still rising. What's interesting with this is the selling of the US dollar, which is continuing ever lower. That's also helping to drive this pair. So you get a kind of equal force on both sides. So you've got selling of the dollar, some good buying of the British pound. That's what you want. And then you've got your levels, price action, and your volume as well. And we've never said this, but it goes without saying that David and I, this is, having this information, putting it all together, understanding what you're seeing, it's not stressful. We've been doing this for so long, we don't find it stressful, but the way we look at it, we say, oh yeah, well, it's reaching that level. That's interesting. Yeah, well, I can see that one. I know there's a reason why it is doing what it is doing from from a volume price analysis perspective. And that's what VPA does. It validates, it picks up the anomalies, but more importantly of all, it is anticipatory. It takes away the emotion that inevitably is associated with trading, because you say, yeah, that's interesting. Yeah, I know it's going to pause there. Yeah, I can see a 2-bar reversal. Oh, that looks interesting. Is that a good setup for me? Do I like 2-bar reversals? And that's the kind of mindset that you have to that you develop, and what this technology, what the methodology and the indicators do, and this is why we developed them in the first place. Is there anything you want to say to that, David?
No.
Excuse me. Right, very, very quickly, we've gone way over time, but we did start late today, so all it remains for me is to thank you so much for coming along, and apologize again for the delay in at the beginning. And as I say, we're sort of looking at new setups with the charts and what have you. As I mentioned earlier, the what we've been showing here is the complete, is elements from the complete forex trading program and the quantum tools. The actual cost of the program is, as you can see here, is $13.91 for MT4, MT5, and $16.94 for NinjaTrader, but it does include the complete suite of tools. You can buy the quantum trading tools completely independently, of course, and the best place to go and see is at quantumtrading.com. If I just bring it up here, this is the MT4 one. Not only the prices, but there's loads of videos and support pages, and you can, just explains how they work and how you can integrate them into your trading as well. You can pay for the program over 3 months, and there's also a 7-day money back guarantee if you find it is not for you. What you also get with the complete package of the indicators is you get all new indicators that we developed for free. They're automatically added to your package. The Camarilla was the latest one that we did for MT4, MT5. We've got a pound index coming along for the British pound. We've got euro index, dollar index, yen index, but there's also a pound. We're also developing the ones for trading view as well. But everything is backed by, as I said, our 7-day money back guarantee, 24/7 support. And you can find more information at, certainly on the education side, quantumtradingeducation.com. You can drop me an email, anna@annacooling.com, or david@davidcooling.com. As if I've got it right. Brilliant. Thank you so much. We're going to mix up the times of these sessions because we're in a new space at the moment. We've got a little bit more flexibility. Just keep an eye out on your email. And as I said, we'll give you lots of notice. Thank you so much for coming along today. As I said, apologies again for the start. And we'll catch you next time. And have a great day's trading.